Alrighty, let's get on with it. We got ADP coming up. Of course, FOMC. So all members of FX Bootcamp are welcome to join. All right, all members of FX Bootcamp are welcome to join today's live special event at 1:45, as you see here. All you have to do is log into FX Bootcamp and click here. That's it. Very nice, very nice. So anyway, so again, whether you're video only member, swing trading member, day trading member, everybody will have access. So thank you for being part of the community. Right on. Well, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Hey, my name is Wayne. Let me know how I can help. Technical analysis, fundamental analysis, monetary policy. Let me know. We can cover that. So today I propose that we go through dollar pairs, yen pairs, commodities, stock markets, cryptos, whatever you want, man. So let me know. I do gold and silver, but if you want me to do platinum or something, let me know. Yeah, maybe. In the description below the video, there's access to additional resources besides these daily live streams. There's a link to my book, Strategic and Tactical Forex Trading. There's a link to FX Bootcamp, which is a community of Forex traders just like you. Again, we're doing a special event today. That's included in your membership. It's $88 a year. Yeah. $88 a year. Not a month. $88 a year. So consider joining FX Bootcamp. And then lastly, a major resource is tradersway.com, an ethical foreign exchange broker. Fast execution speed, narrow spread, huge swaps. All that's good. Yeah, all those things you want to see on your checklist. But ultimately, you choose a service provider out of respect, out of trust. And I trust tradersway.com. So I don't know. Don't take my word for it. Just open up a demo account and see if they can earn your loyalty and respect. And if so, open up a live trading account with them and trade with them. So, anywho, let's start with the stock markets. Okay, NASI, S&P. You look at them this way. Let's put them out on like maybe an hourly chart. Okay, I got to back out my S&P a little bit. And on the hourly chart, they are both bullish. Look at that big decline yesterday and then a pop. Cool. So, well, what do you think? Do you think this FOMC thing's going to matter? Yeah, probably, huh? Well, we got ADP. That's the first one coming. So why don't I get that all set up? Un momento, por favor. Why isn't this working? There we go. Just got to log into something. pop that. Actually, I want to pop this. Whoa, 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 whoa. Hang on.
Indicators. We just don't have it yet in terms of the monthly.
All right. So I got that. I'll move that over. I'll put that here. Here. Okay, so we got ADP coming out in a few minutes, so we'll get that. Do I still believe the Fed will raise 50 basis points? What I've been saying is I've looked at the numbers. I've looked at the subcomponents of inflation, and I don't believe we're anywhere near the level that the Fed will need to go to get to achieve its objectives. So do I think they'll raise by 50 basis points? I think they could. But I also acknowledge that what I think is irrelevant, and that 99% of the market thinks like they will raise by 25 basis points. Well, I'm not so arrogant to say that I'm going to be right and 99% of the market's stupid. So no. So then I have to adjust my narrative. Okay, so the Fed will probably look at that data, and they don't want to disrupt the market. So instead, what they'll probably do is raise by 25 basis points and then change the narrative. So Jay Powell will say, we're going to continue raising, aka ongoing. So we're going to continue raising, but at 25 basis points, and for potentially more meetings than what's priced in. And then he could even push back on the idea of like a rate hike by the end of the year. Absolutely not. Now, of course, he won't say it that way, but so he could push back in many different ways. You see? So it's not that I believe they're going to raise by 50. I think they could. And it is, in fact, maybe even warranted. But if the market wants them to slow down, they might just slow down the rate of hike. But instead of going 50 and then 25, they go 25, 25, 25. And that's not priced in. In fact, maybe they go 25, 25, 25, 25, and then pause. And then the cut, forget it. Forget about it. Well, but it's in there. Okay? Well, so that's the thing. So if you want to know more about that, I don't want to sit here and talk about the Fed meeting for the next 2 hours when I'm doing that today. So join FX Bootcamp. Be there with me. I'll explain what I think is likely to happen, the way the market's likely to react, when it'll react, and all that kind of stuff. So I'm covering that later. So join FX Bootcamp for a whopping $88. Okay. Favor says he wants to cover Kiwi CAD. Okay. Yeah. Why not? We'll get there in a second. Okay. We look here at the UK. Okay. Oh, I gotta get at my drawing tool. There we go. Okay, so anyways, the UK was following this, and now it's moving sideways, right? And now maybe, what, a break to the upside again? Not really sure. All we have here is, well, we don't have a breakout yet. So technically, the way that you would box this in is you'd say, okay, we were trending down for a little bit, just a little bit, as 50 Cent would say. And now we're in this box. And so what a prudent investor would do is wait for the breakout either way. Okay? Depending on your bias. Okay, we're about 3 minutes away from ADP. Okay, DAX having an update. Up, 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 down, down, buy. Euro 50 having an update. Everybody's risk on. They think the Fed's going to slow, and that's great. And that the Fed's going to raise by 25 basis points, but Europe's going to raise by 50. Okay? Grumpy Cat, it's in the download section of FX Bootcamp. I think I probably still have it open, don't I? Okay, here's inside FX Bootcamp. You go here, download it here. Chart Toolkit, MT4, MT5. Easy peasy lemon squeezy. Just log into FX Bootcamp, Grumpy. Eat it, boo-boo. You gotta log in to get the big new basket. All right, so anyways, let's get on with, I suppose, some dollar pairs. You might want to look at, what do you want to look at, euro dollar? So here, this is something we talked about last night in the day trading group, kicking off the daily 21 here and here. So far, so great. Okay, we must be just seconds away from ADP. All right.
106,000.
106,000. Little bit light. A little bit light. Just a little bit. Okay, so what does that mean? Well, it means to the market that the Fed policies are working and they only need to raise by 25 basis points. So everybody's going to be risk on, huh? Risk gone. So let's zip back now to reality. Oh, there goes gravity. Huh? Mom's spaghetti. Zip over here. And now, so we got the great double top. Remember, 40, is it 61 or 81? 4081 is our projected top if you're a bear. So think about that. Are you a bear on the S&P 500 for the rest of the month? Do you think NFP is going to bring it down today? So if you think that way, based on technical analysis, one of the tops that is projected is 4081, and that we will drop all the way down below 3800. So a 200 point drop is what a bear would be looking at. What do you think? Okay, what do you think? So let me do this a different way. Let me put some things down. Oh, well, let me, okay. Okay. I got a little poll here. I'll sing a song while you answer the poll. Listen to the story about a man named Jed. Poor mountaineer barely kept his family fed. And then one day he was shooting out some food, and up came the ground ring, and up from the ground came a bubbling crude. Black gold, Texas tea. Well, the next thing you know, old Jed's a millionaire. Then Granny said, Jed, move away from there. California is the place you ought to be. So they packed it all up and moved to Beverly Hills, that is. Swimming pools, movie stars. What? Come on, guys, answer the dang poll. Trucking Mogul, that is so fun. That is so funny. My mom loved that show. All right, now we got enough votes. Thank you for voting. And to the other 50% that didn't vote, what do you got going on? Too busy. I'm listening, but too busy. Anywho, 34, say 39, 20, 25, say 30. Okay. And so looks like 50% say down, and the others are sort of modestly up. Oh, okay. Trucking Mogul says, I'm not very knowledgeable about trading the indices yet. It's all the same, guy. It's all the same. Oil, gold, S&P 500, euro, dollar. It's all the same thing. 10-year T now. It's all the same thing. Yes, each might have slight nuances and different cycles, but the overall governance of the financial universe is macroeconomics. So if I say risk off, the first thing I'm going to think of is S&P 500 down, yields down, dollar up, oil down, gold down, Bitcoin down. And it's just that. You see, Trucking Mogul. So that's where I'm trying to get you at. Okay, Kiwi Cat. Okay. So what, a couple of weeks ago, I was long on this, and now I'm not long on this. And so what are we looking at? Well, let's back out a little more time than a 15. Oops. Let's put this maybe on an hourly chart. Maybe adjust our data set here. Depending on how you want to get this. You know what I think I want to do? I want to go Insert Indicators, Custom, Price Action Pivot Points. And let's go, let's do, if we're going to be on an hourly chart, let's add a little more time. Now, it's got to do a lot of calculations, so you'll notice that your chart will freeze for a little bit. Okay, not responding, not responding. It's a lot of calculations. Hang on now. It'll kick in. Did you hear about Google's quantum computer? There we go. Boom. So now you can see sort of a medium-term trend here. So that was a lot of math. It took my machine, which is not a bad machine by any means. It took, what, 20 seconds? So Google's quantum computer, they fed it a mathematical problem, and it solved it in 200 seconds. Now, the interesting thing is if you take, quote unquote, a normal PC, like a good one, like not a normal PC, let's say, I don't know, even a $10,000 desktop type computer server or whatever you want to call it, $10,000 machine, but with a normal kind of chipset, it would take 10,000 years to solve the math problem for a top of the line current computing computer, right? And so the quantum computer solved the math problem that would take a normal computer 10,000 years. It did it in 200 seconds. And you're like, wow. Huh? Wowzer. That's a big difference, huh? So anywho, there's your Kiwi CAD. Yep. So you could extend this even further, obviously, going back more than 333 hours. So you can see there's this going on, which means if the upward momentum is going to continue, then we are in a buy zone. So will this continue up? Well, that has a lot to do with fundamentals. Is New Zealand going to continue raising interest rates or be paused? Okay. The second thing is what's going on in Canada. We had a huge move in Canadian dollar yesterday. So that's what took me out of this trade because I was long and strong. Okay. So the question is, what's going on in the world, and will this reverse? Is it Canadian dollar related? Is it New Zealand dollar related, or both? So let's just say the uptrend, like you start with a hypothesis and then try to do a proof, like prove it. Okay, hypothesis number one, this continues up. What is the best buying price, or let's say prices, using monthly pivot points if you're a bull? Well, Grumpy Cat, that would be an easy answer. If you asked a quantum computer what is the meaning of life, it would say to make more quantum computers. Right? What does a sentient being want to do? Live? Reproduce? And that's pretty much it, right? It does. I think to be sentient, you don't want to die and you want to reproduce. Anyways, what are the two prices based on technical analysis? Okay. That's price A for bulls. This is price B for bulls. So what's up with Kiwi CAD? Well, if you're a bull, one of the things you're going to look for this week and next week is something like that. Hua? Unless you believe something fundamentally has changed. So, who asked 2 or 3 times about this one? Let me find, who asked about it? Favor. Okay, Favor. Tell me about the Bank of New Zealand, the Reserve Bank of New Zealand. Are they going to raise interest rates at their next meeting? And if so, by how much? Favor? So they have super high employment, higher inflation than the United States, but you'd have to compare that to Canada. Interest rates are at 4.25%. What are your thoughts, Favor? Okay, right now they're behind Canada. Canada's at 4.5%. New Zealand's only at 4.25%. So are they going to match? Okay. 56% of institutional investors are long Kiwi and 70% are short CAD. Woo, 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 whoa, whoa, whoa. So there's some thought there. So how are you going to put that together? Well, it depends on what these guys are going to do next. Okay, Favor's not answering, so I guess he's gone, or she or he, they, gone. All right, well, thanks for sticking around. All right, so the next thing would be, because I asked, what do you think is going to happen next at the next meeting by the Reserve Bank of New Zealand? Well, they've already told you, so you should know. The next thing I would say to you is, what is the Bank of Canada going to do at their next meeting? And then you compare and contrast. So, for example, let's say Canada was cutting interest rates and New Zealand was raising interest rates. Well, that'd be easy. Buy the raiser, sell the seller. Huh? And look how beautiful it is. Look at that. It's one of these things where I just chuckle, right? That people just don't do the work. Did you download the PowerPoint presentation that says higher interest rates are needed to meet our inflation and employment objectives? You don't even have to think. You don't even have to understand macroeconomics. They've already told us inflation's too high and they're going to raise interest rates. Now, do the same thing for Canada, compare and contrast. Right, and Favor says, well, I don't know anything about that. I just do price action. Okay. Fair enough. So with price action in play, I've gotten out of my long position. And most likely I'm going to prepare to re-enter a long when I have proper price action. Okay. But of course, you can't predict the future if all you do is look at the past. It's helpful for sure. Don't get me wrong. It's helpful. But it's not the full picture. All right. Cool. So, anywho. Okay, CAD really trying to come back here. Big question is if Canadian dollar weakens again. So, we went through a period here of Canadian dollar weakness. Is it possible that we do something like this? Well, someone that only uses price action wouldn't be able to predict that. But someone that uses more than that definitely could have a hypothesis and then would use price action and technical analysis to confirm or deny market conditions are favorable to your prediction. AKA, you can think ahead. How about this one? Okay, I'm missing a 21, obviously, but nonetheless, I could probably add one. Insert indicators, trend, moving average, 21. Pachow! Okay, talk to me, Goose. Where is this probably going to be in a month? Up. What? How do you know that? Well, I know, or at least I have an opinion. I want you to think about this. I have an opinion of what the ECB is going to do based on their economic data, but also their statements and their speeches and their writings and their reports and their interviews. Okay, great. So that makes me think euro up. For now, anyways. For now. Things can change. And I've done the same thing for the Bank of Canada. And I think this one down. So that on net, that means up. Okay, so there's my hypotheses. Now what? Oops. Now what? Well, okay, I'm a bull. So now I should drop into a smaller time frame. I can drop into an hourly, let's say. And what's my strategy for the month? My strategy for the month, the Euro CAD, if that was my hypothesis, I'm not saying that's right or wrong. I'm just saying that's you developed a hypothesis somehow. We call that a bias. And that means your strategic plan is we're going to head north to 148.5. Cool. So now you use technical analysis or price action, which is a form of, of technical analysis, or Elliott wave or whatever you want. Pick your flavor. It doesn't matter to me. What matters to me is you've thought about it, not just thought about it. I mean, you analyzed the euro. You analyzed the Bank of Canada, all the economic data that the Bank of Canada tracks, and then you've analyzed their monetary policy in reaction to the economic data. That's what fundamental analysis is. A lot of people think it's, the ADP came out, that's fundamental. No, it's not. That's just news. That's one data point in a data set. And that's just one data set in a data set of data sets. Like, who cares? Okay? You're like, well, but Wayne, it creates volatility. And I like to trade volatility. And I'll say, well, that's good for you. But I think volatility is bad. So go ahead. Good luck with that. So anywho, so now we got to use technical analysis. And this is where favor would really, really shine, let's say. Is at some point a technician might say, that's a double bottom. So the next important thing is a higher high, which is just a retest of this other high. And then the next, and I'm going to do it in a different color, we're going to probably retest this old high. And then we're going to probably work our way up here. And then there's going to be yet again another move. And let's say down and then up. And that should be at some point between 148 and 149. Let's say around 148. It's actually 147.5 to 148.5. So around 148. You should seriously consider taking profit on that first part of the move, because the strategy that you developed is 144.5 to 148.5. That's the strategy. The tactics now is higher high off of a double bottom, which predicts a higher low, and that's your new buy. And then you get a new higher high. Okay, so then you do this in a nice little roll reversal, and then the price action takes you up, and in this area you exit. So your choice is, do you buy the double bottom or the higher low? Okay, now if that one doesn't work, okay, because this could just roll over now, you do something very, very similar down at this price. You're like, well, how do you come up with 143.5? Oh, that's technical analysis. Trucking Mogul, they released that data so you could just read. You don't have to think, you just have to know. So just go to the Bank of Japan website, look at their press releases. Okay, it's just there. So I don't want you to say things like, oh, I think the Bank of Japan's policy on yield curve control is blah, 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 blah. What I want you to say is, according to the press release on the Bank of Japan website, their yield curve control is blah, 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 blah. And to me, there's a big difference. In particular, if you're going to be managing money someday, I got to change your language. And it may not actually be the language. Maybe that's what you actually do. You think this, but I want you to know it. Okay? It's the difference, like, I don't want you to dream about being successful. I want you to act like you're successful. You see the difference? Like, it's nitpicky, but ultimately it's a huge difference. I want you to act like you actually go to the website, actually read the press releases, and then actually think about it, and then form an opinion. So now it's not even a thought, it's analysis. You don't think, you do analysis on facts. And there's a big difference. So Marcus Aurelius and Seneca, who lived thousands of years ago and had lots and lots of interesting responsibilities in life. Actually wrote a lot of her thoughts down. And I think it's interesting how they really took offense to dreamers. You can't change the future by dreaming. You change the future by acting. So you got to act. What's the strategy? Okay. What's the strategy? Well, you gather intelligence and formulate a strategy, and then you kick some butt. And that's when your technical analysis will really shine. So going back to Favor, if Favor had done the fundamental work to create a bullish bias, then the technical analysis is easy. And the technical analysis either confirms your hypotheses and puts you into trades that are good trades. Because remember what Sun Tzu said, because many plans were made. Okay? Or it keeps you out of mediocre trades because the market doesn't match your bias. And one of you is wrong, and it doesn't even matter which one. If one of you is wrong, you are going to lose money. So wouldn't it be awesome if you spent 70% of your time doing analysis and 30% of your time trading, and you only traded in periods in which your analysis and the market conditions agree? You're going to do better at the end of the year. And I know you agree. Otherwise, you're going to fight me on the messaging and we're not going to get along. Right? But most people here would say, oh, yeah, okay. If I formed solid biases on research that, explained the movement of capital around the world, and I only traded in market conditions that were favorable to my research, well, yeah, the vast majority of the time, you're going to be right. And because you've done your research, you're going to have the confidence and strength to let your winners run because your trades are worth more because you've done analysis. Because they're either worth more or they're worthless. Yes, that was a play on words. Thank you. Thank you very much. Thank you. So you're like, yeah, I bet you. Well, I know, I would assume. How about that? It makes sense. It makes sense that you would do better at the end of the year. Okay? Is it possible to trade using technical analysis without those fundamentals and news and all those interest rates and bank? But see, Favor, why would you want that? That's where I have a disconnect with some people. So you want me to either say, no, you have to know all of that. The opposite is, no, you can trade just with technical analysis. And I can give you that answer. It's true. You can trade just with technical analysis. Okay, great. I don't know any professional traders that think that way. So you could, but I would put it this way, because I don't mean to insult anybody, and my goal here isn't to say my way is the only way, my way is the best way. I'm certainly not just trying to say I'm the world's greatest foreign exchange trader. So I'll say it this way. You could probably trade profitably, only using technical analysis. But as someone that has studied graduate level statistics and has taken an entire class at MIT on analyzing statistical performance of hedge funds and algorithms, I would say that you could be profitable, could be successful, whatever that means, right? Profitable, but you would be suboptimal. So again, I go back to this idea, could you trade Forex just with pure technical analysis? I'm like, why? Are you too stupid to learn fundamentals? Are you too lazy to do the work? And my answer, I don't think you're too stupid. And I think you're going to need the work ethic. Right? I mean, you can't be a successful, lazy Forex trader. So I would say over a period of time, and it could be years, what I think you should have, Favor, as an attitude is you want to know everything. I would say, what can I learn next? Because I've been doing this for 20 years and I'm still trying to learn as much as I can. I'm in a process of learning new stuff now. Not new ways of trading. I haven't changed the way I trade, but I'm getting better and better and better at analysis. Okay? And I have the attitude I'm willing to do anything and everything. I mean, seriously, who the hell goes to graduate school in his mid-40s with a career, with a family, wife and kids, and do it for 5 years as a full-time student? Like, who the hell does that? And then when he's done, then do postgraduate work at Harvard Business School, MIT, at Oxford. Yeah, the Oxford in the UK. Like, relentless. Why? I want to know more. And so, Favor, I think that's what will get you. I think the attitude is really important. I want to know more. I want to know more. Then, right? Right now, I'm really learning more and more about the energy complex. I know I did a whole course on it, and it's very detailed, but I'm looking at more and more levels. I'm peeling the onions, man, and I'm liking it. Okay? What kind of economic data? Dan? Really? Dan the man. Man, you've been around a long time, Dan the man. You should know that, Dan. Anyways, I'll give you the basic. I got Quant Box open. I'm going to launch it next week, by the way. Oh my God, I'm actually going to do it. Okay, so like New Zealand, what kind of data do I look at? Okay. Fundamental data. This is where you probably want to start. Compare GDP in New Zealand and in Canada. You want to look at inflation levels. Okay. In New Zealand and Canada, you want to look at employment rate. Look at that. The right? Much more unemployed in Canada relative to New Zealand. You want to look at the interest rate differential. In fact, that is so important. I even have it highlighted here. Interest rate divergence. New Zealand versus Canada, 25 basis points toward Canada. Okay? So that'll do things like that'll favor the Canadian dollar. Well, that might change soon. Depends on what New Zealand does next. Well, why don't you go to the Bank of New Zealand's website and figure out what they're going to do next? Because what will happen if this matches 4.5, Canada loses a point, and it changes this. What else? I look at, right, institutional positioning. Institutions are long New Zealand and short CAD. Yet retail is short New Zealand, long CAD. Look at this. So professional traders are long and retail traders are short. Which one do you think is right on the long run? Yeah, I know, right? What else? We look at seasonality. Sweet. What else do we look at? Technical analysis. Boop, 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 boop. Okay. It was trending up previous to this, and this is looking at the daily chart. It's recognizing using technical analysis that we've made a lower high, lower low. So that's not great, but on the long run, it's still long. So it's right. So it's looking this way maybe in the future. But that's going to go neutral pretty soon, maybe, unless it turns up soon. So there's a lot that you could look at here. Technical analysis, fundamentals, positioning, right? Seasonality. So typically, like looking at seasonality, typically in this month, this pair goes up. When you look at the 5-year average and the 30-year average, this usually goes up this month. So that favors New Zealand, right? So that's it. Lovely. Huh? It's beautiful, huh? Yes, you're ugly with your smile so worn and your teeth so green. Anyways, yeah. Cool, right? It's cool, right? Oh, yeah. Beautiful stuff. It's officially being launched. I think I'll pick Tuesday. No, Tuesdays are terrible days. Maybe Wednesday of next week. Maybe Monday of next week. I'm going to officially launch that service, but if you want to check it out. Yes. Okay. So we got a request for commodities. So let's do gold, oil, and something next, huh? Pachow. Okay, Bitcoin doing nothing. So that tells us no real risk on or risk off or any change in risk on or risk off. So that's holding neutral. Okay. We had that beautiful move the other day in oil, but now we are at a junction. Short term says up, long term says down. And we are now the monkey in the middle. So what I would do is I would quickly check the daily and see where we stand. Technically, this is still bearish. Now, I do fundamental analysis of oil too. Oh, God. Yeah. Yeah. And look, I understand if you're a bull. I understand it. I get you. And I understand if you're a bear. Evans wants an arbitrage trade. Okay, here's an easy one. Very, 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 very soon, you are going to see nat gas in the United States spike. Now, it's terribly bearish, 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 bearish. It's terribly bearish. I have an opinion, and I've already taught everyone in the oil trading course, and I've taught everyone in the swing trading course, and of course, therefore, everyone in the day trading course knows about this arbitrage trade. Okay, great. I think sometime very soon, it could be days, it could be a couple of weeks, but I imagine soon, we're going to get a spike in natural gas. At the exact same time, because this is natural gas in the United States, you're going to see a spike, a drop in natural gas in Europe. So Evans, an arbitrage would be when the charts allow you. So again, now you have a strategy. You want to do an arbitrage. So now you might want to use technical analysis and say maybe something like, when the hourly 21 crosses above the 55, you're going to buy American nat gas. And then when something similar but opposite happens in Europe, you're going to sell European nat gas at the same time you're buying American nat gas. Now, why? Well, this has to do with a fracture in the market. And there's a bottleneck right now in the American marketplace for sending natural gas to Europe. So natural gas in Europe is higher than normal, significantly higher than normal. Meanwhile, there's this buildup of natural gas in the United States. We don't really need it, and we can't sell it to Europe because there's a bottleneck. It can't leave. So prices here are down because of the bottleneck, because it pushes up supply here and it locks us out of a foreign market at a higher price. So prices fall. Now, when that bottleneck is addressed and fixed, then we can take all this excess natural gas and sell it to Europe at a higher price. Higher price than European prices? No, higher prices than American prices. So if you can only sell it for $2.50, but you can sell it for $20 in Europe, where do you want to sell it here? For $25 in Europe or $2.50 here? Well, you're like, oh my God, I want to sell it in Europe for $25. Well, what if prices in Europe are $50? So then European prices would fall by 50% from 50 to 25, but then prices in America would jump from 2.5 to 12.5 or something. You see what I mean? Like, it's going to push one price up and pull the other price down towards more of an equilibrium. And this has to do with the structure of a market. So, for example, they'll never be exactly the same price because there's carrying costs. It literally costs money to liquefy the natural gas and then put it onto a ship, and then a specialized ship, and then have that ship cross the Atlantic to get to Europe and unload in Germany or in Holland or something. And, you know, it costs money, right? So there, but and of course in America needs some of that nat gas for itself. So anyway, so that would be an arbitrage. You would, if this bottleneck is addressed, and I think it's going to be announced, or not even announced, it's been fixed, but it has to be approved by the government. So if the government approves the fix and we put everything back online, nat gas would spike in America, collapse in Europe, and you would have an arbitrage. And that's how the Wayne do. What do you think, Evans? Can I get a whoop whoop or at least a thumbs up? Only 1/3 of the viewers have clicked the thumbs up. Yeah. Now, let me tell you though, Evans, a Forex trade is an arbitrage. You are actually a foreign exchange arbiter. So, for example, one of the trades I set up last night was long Euro Swiss franc. Nice! Great. So if I buy this, what did I just do? I bought the euro and sold the Swiss franc at the same time. That's arbitrage. See, it's not like, so like, let's say you were buying euro futures. You're actually arbitraging euro dollar because your futures contract is priced in dollars, but let's not get overly weird about that. Let's just say if you bought a euro contract, you're long euro. If you bought a pound contract, you're long pound. Okay, great. That's not necessarily arbitrage. You're just buying an asset. Okay, so you're buying a futures contract, for example. Okay, so but if instead you're buying euro yen, you're long euro and short the yen, and that's an arbitrage. And so if that doesn't make you look taller, nothing will. When you're explaining to beautiful people, okay, your beautiful people are talking to you and they're like, "What do you do, Barry?" You say, "Well, I'm a foreign exchange arbitrator. I'm also an international financier. So I'm either arbitraging foreign currencies, playing different economies against each other, or I'm lending emerging markets money for economic expansion, like Mexico or South Africa." And now you're like, "Whoa, what?" You're like, "Yeah, I arbitrage and I lend. I am a loan shark for emerging countries." That's talk, of course. I had such a good time in Cuba, and I had a 2.5, 3 hour conversation with a Forex trader. But the Forex trader for the country. How would you like to be a foreign exchange trader for an entire country? Isn't that interesting? By the way, I showed him QuantBox. Every hedge fund, by the way, I've showed the QuantBox to, they're like, "Fudge, that is awesome." So anyway, so I showed it to someone that just last year ran the foreign exchange department for Cuba. And he's like, "Wow." He's like, "Wow, nice." Yeah. So anyways, telling you. Okay. So if exchange says, "Hi Wayne, what will cause nat gas to go up, or at least the factors?" So anyways, so look, here's the thing. Here's the thing, FX Exchange. I've explained it in great enough detail for it to make sense. I said there's a bottleneck and all that kind of stuff. But look, I set this up and trained people in July in the oil trading course. I've talked about it, 2 or 3 times in the swing trading group. Like, it's been done so many times. I just don't want to go through it again. But this is the stuff you learn in FX Bootcamp. So am I going to cover it in the live stream? Well, I did it to a sufficient degree in which somebody asked me about an arbitrage trade. And I'm like, "Arbitrage trade? Yeah, we set that up in July." And not just like, it's not like we're disappointed it hasn't happened yet. We know that it wasn't likely to happen until now. So we knew to stay away, but be ready. And we knew the things to look for and watch for. We just looked at it the other day in the swing trading group. Like, this is just what FX Bootcamp does. Yeah, we're smoking hot like fire. So anyway, man, it's there. It's all there, FX Exchange. So I gave you the 10-minute version, not the hour version. Yeah, but that's what we do. All right. So euro up, euro up, euro up. Okay, why is euro up? Why is euro up? Well, they're going to raise interest rates by 50 basis points. How do you know? Have you done the research? Bank of England's going to raise interest rates by 50 basis points. How do I know? I don't know. Have you done the research? What do you think? Is it 25 or is it 50? See, if you do the research and you develop an opinion, then you would know why, let's say, maybe will pound dollar go up or will pound dollar go down? Okay, so on and so forth. Well, you know what we need to be analyzing, right? That's right, Alexander. There is a difference between CPI and PCE. They chain differently, so their anchoring method is different. Also, the PCE basket changes a lot more, so it's a lot more flexible. So, for example, CPI might say, well, the price of Apple iPods have fallen. And the PCE guys would say, iPods? Nobody uses iPods anymore. Okay. You know what I'm talking about? Oh, Dan the Man, I never said it was good. One thing, Dan, you need to stop thinking strong is good and weak is bad. That is not correct much of the time. Okay? Up is up. Down is down. Up doesn't have to be good. Up could be bad. Okay? So stop thinking good or bad. That's qualitative. Okay? There is no good or bad. Okay? Only humans are good or bad. So anywho, again, you would form an opinion about, do you want to sell a rip or buy a dip? Again, Alexander, the PCE formula is a little more sensitive to reality than CPI. The basket is more flexible, and their chaining anchoring method is different, so it makes more sense. Okay? So it's, for example, one of the differences is the weight of rent. So, for example, if the Fed cares about wages and rent, and they're worried about how wages and rents impact inflation, and they believe, because remember, there's no right or wrong, it's only math, right, Alexander? It's only math. What's your formula? What are your variables? So the variables in the PCE math place a little more emphasis on rents. And so the Fed says, well, we're interested in rents. Oh, well, then let's use PCE. Now, in this case, rents are a little more sticky. So you would look at PCE, headline PCE, core PCE, and then PCE deflator. And that's the anchoring difference. So let me maybe pull up the definition. PCE deflator. Okay. I'm just looking here. PC and CPI. Well, let me give you this, and you can get into that a little bit more. I think that will be too esoteric for us today, but I'll give you the link because I think it's going to get too in the weeds. I just wanted like theeconomy.com, PCE deflator. Investing.com, yeah, no, that's just the numbers. Maybe this will give us. See, that's BLS. I thought we'd get this on like Investopedia. Oh, here we go. But it's not the deflator. I want, because they look at the deflator. Oh, because well, let's just take that out. Maybe, come on, Google. Oh, wow. It's not working very well. So, well, maybe they'll actually answer it. They're not answering it here. CNBC, huh? So, yeah, they're not answering it. Service area. Wow. Junk, huh? Well, anyways, because what they're doing, so they're right, so they're measuring it over time and different dollar prices, and obviously that's going to give you it will give you a different sense, like it tries to adjust for inflation. And then if you look at core, it takes out a lot of the, let's say it removes food and energy. So now you get it down to stickier things that are more indicative of inflation based on too much money. Because remember, if food and gasoline prices go up or down, you might change your behavior a little bit, but not a lot. So if gasoline prices double, you don't cut the amount of gasoline you buy in half. You generally buy the same amount and bitch about it, but then you buy less steak and more chicken. Okay, so there's that kind of effect in economics. And so if your rent goes up $50 a month, you bitch about it, but you should pay it because it's so expensive to move. You're like, well, screw you. I'm going to go find another apartment. Over $50 a month? Really? And then, it's too much effort. So you pay. Okay. And so anyways, so what the Fed is trying to do is have a more sensitive anchor to adjust for inflation, then remove the more sensitive variables, it's based on elasticity. So you remove gasoline, you remove food, and now you're down to this other stuff, and that's and what they're trying to look at is the rents and the wages that are sticky, because those things also have an elasticity that says rents tend to not go down unless the market is collapsing. Wages tend not to go down unless the entire market is collapsing. So now they're like, hey, is the market collapsing or not? And CPI doesn't get you that kind of detail. You see what I mean? Yeah, but Alexander, I've already done it. It's in the macroeconomics course. I already did that. And I think we actually did this. I mean, I went over core PCE, and I've done it. It's done. It's in FX Bootcamp. Winner, chicken dinner. Let's see. Planning Essentials, Introduction to Forex, Complete Guide to MT4, Forex Trading Basics, Technical Analysis, Principles of Price Action, Central Banking Fundamentals, Macroeconomic Principles. I think it's in here. And I'm logged out. And I don't know I guess it's in here. I'll zoom in a little bit. Okay, this is 100%. Oh, that's 100%. All right, so intro to macro, GDP, fundamentals of trade, terms of trade, supply and demand, solo growth model 1, solo growth model 2, business cycles, money supplies, fundamentals, where is it? Economic data and news. I don't remember where it is now. Money supply, business cycles, fundamentals. Where do I cover it? I don't even remember. Money supply, no. Business cycles, not likely. Maybe it's under fundamentals. Look at this, guys. The money supply times velocity of money is equal to GDP times prices. Look at the level of detail. Oh, Gord. Oh, Gord. Isn't that just awesome, dude?
The seaports are investing to better
factors
technology.
of production.
But they chose as a society how to respond.
K plus L is equal to Y. Like, I'm telling you, this is college level economics. Capital to the alpha, labor to the alpha is equal to GDP to the alpha. So it's probably somewhere in here. Productivity, capital, labor, specialization, government intervention, why intervene, supply. Let me go back to that. Business cycles. Oh, God. C plus see, like, for example, you probably have heard me do C plus I plus D plus X, net exports, but you probably have never seen wages plus prices plus inflation plus interest rates, right? Anyways, it's another way of measuring. Uh-oh, it's fighting me. Why is it not? There you go. Huh. Well, let me go further. Why won't it let me do it? Anyways, okay, so it doesn't seem to be in that lesson. But nonetheless, it's out there. It's been covered, bro. Bro. Maybe it's under here. Yeah, PPI. Yeah, okay, it's going to be under here.
The world. Now, there might generally, right? And then money. But we want to know if people are out is working. And then, of course, this data, they just look at the headline data, that example, and you can look at other
retail sales, non-farm payrolls,
for example, of labor statistics is tracking.
Jolts.
Just do some
Jolts.
spend more to get labor, to buy the things they need to make a widget.
PPI.
Is this, hey, how's profitability this month? And stuff. Okay, but what we're looking at is inflation. That's what we're looking at.
It's probably in here somewhere.
Buyers and all, right? The global economy is in trouble.
So anyway, so you can see this. I break down the economic reports into money, labor, and capital data. And so I do cover it. So maybe I don't do the deflator in there, but I've talked about it before. So there's your PPI and your PCE. Anyway, so I've definitely talked about it in great detail, as you can see. I mean, what a cool lesson, huh?
And that's the part that I want to point out today. You have to understand what they do. It's too simplified to say, oh, they're this or that or that. Go find out what they're doing. And there's no such thing as good or bad in economics, right? There's only
I just
rate
said
of
that
change.
today.
Okay. So what we want to look at is, are we importing, or let's say the economy we're analyzing, is it importing? Is it exporting? If it's not doing any business at all, it's in trouble. Okay. There's no economic activity with international traders. Think Turkey right now. They don't do any business. It's why they got into trouble in the first place. They did very critically important. Okay, as you make these decisions. So let's take a look. Okay, this is the United States of America. Imports. Look at that. Okay, one of the things you have to look at is we've been importing more and more and more for the whole year. Is that bad? Is that good? Well, when we looked at the other trends, factory capacity and utilization has been going up in that same period. Our factories went from 68
Sorry, guys,
to
I find this
75
interesting.
during this period. Percent capacity being utilized. Very productive, right? So why are we importing this stuff? Because we need even more. Right? Solo growth model shows that our steady state is very, very high. We're very productive. We produce a ton, and we're producing even more day after day, month after month. We're even more and more productive. It still hasn't tamed our appetite. Or, more realistically, we've decided the United States, instead of producing everything for itself, we're going to produce some things ourselves and then buy things from others internationally that can do a better job through their specialization and at a lower price due to their economy of scales, right? That they can do it themselves, and we'll give up some money and buy their TV, give up some money and buy their cell phones. We could do it. The United States can build a TV. I had a Westinghouse. I really did. It was pretty funny, right? You'd watch it and all of a sudden you just turn off. I'm like, what the hell is that? Right? Turn it back on. You watch it for, turn off.
So anyways,
No,
look
it's
what I'm
not
talking
the
about.
time.
Yeah, the Americans can
it's
make
just the
TVs, but
motherboard
they
or something.
don't.
Right? Yeah. So you can see the specialization can change, right? You can see there's a competitiveness. That's capitalism working. Okay? That's capitalism working. So now you can get TVs for cheap, but the United States has to do other things too. All right? So that's the dichotomy there. I showed you that the United States has been month after month after month more and more productive just by looking at how much factories are being used. And yet we're importing more and more and more every month as well. Okay? Okay? And these are our exports. This is making money. This is spending money.
I mean, come on, dude. That's a good course. I mean, come on. I'm fascinated by it, and I did it. I like that was good. I made some good points there. Like, oh man, I want to watch that. Anywho. So, anyways, look, I'm going to do a special event today, so I might as well just bail out on this on the live stream today. I mean, look, I've done it for what? It was an hour and a half. Today at 1:45, I'm going to open up the room. I guess I should bring it back to the website. Oh, here we are. All right. So at 1:45, I'm in the, that's interesting. It brings you to the training courses. That's interesting. Yeah, there we go. Yeah, at 1:45, if you're a member of FX Bootcamp, and all members are welcome, even if you only pay $88 a year and you're only watching the videos, hey, you're welcome to join us. Just log into FX Bootcamp, click here, and at 1:45 p.m., we are going to watch the FOMC. We'll get the FOMC statement. I'll review it and explain it. We'll also watch the market freak out. And then at 2:30, we have the press conference. And I think many market participants are going to find out they're wrong about the way they're positioned, and the market's going to freak out again. Okay? Hey, Bernd, it wasn't me speaking that got me excited. The topic got me excited. That was good. It didn't matter if it was me or not. That was good. Like that was good, man. That's really powerful stuff. So that's what I got excited about, right? So anyways, why don't you join FX Bootcamp, everybody? If you're a member, I'll see you today at 1:45. Okay? Raj Neil, more than $88 worth of stuff. So there you go. So I will see you today. If you're in my day trading group, I suppose I'll see you tonight at... No. I guess not. If I'm doing a 2 to 4, and then... so I guess we're not going to do a day trading group tonight. But we will do the FOMC stuff. Right? No, I know, Bern, but it makes a good point. I don't want to come across wrong. Right? Remember, the feedback I get is I'm an arrogant prick. And I don't feel that way in my heart, but I do have a level of confidence that can come across as arrogance. And sometimes that is true. But deep in my heart, that's not how I feel. So anyways, there you go. So before you go, please click the thumbs up button. Please give a like. Please leave a comment on the recording. Leave a review on my book on Amazon.com. And give Traders Way a shot to earn your loyalty and respect as a foreign exchange broker. And I'll see you soon. Pachow. Hey, that just happened.